What up, words man? Dream with Dream Motivates. Listen, once again, I get the honor and privilege to come to you right here with the Level Up Alliance podcast with my girl. Listen, right here, we have a very special guest. This guest just likes to kiss wealth now, not later. Y'all check it out.
Welcome to Level Up Alliance podcast. My name is Dee Garrett, your host. Level Up Alliance, where we help people become legends of legacy for their family. And today, I have the honor of speaking with my guest, Chalamaine Armstrong, co-host with Dream Motivates today.
What up? Got my sister in the building.
Yes, I'm excited. Thanks for having me.
Absolutely.
Yeah.
Thanks for being here.
You're welcome.
You look pretty. I see you done stepped out. You know what I'm saying?
Yeah.
Let 'em know.
Every now and again, you got to get dressed up and show people you know how to clean up nice, you know.
Yeah.
Otherwise, being regular, but today was different.
Yeah.
You look beautiful.
Thank you.
You did.
I had to come to the podcast prepared.
Yes.
Hey,
Let's do
congratulations, D. Garrett, on your podcast.
Thank
the
you.
podcast. Shout out to everybody that's been liking and sharing and
Yes.
subscribing.
Thank you. And
Yes.
speaking of which, I am representing Kiss Wealth. I can't even say it.
Kiss Wealth
Now.
in the
Thank you.
building.
T-shirt right
let's
here.
Go,
Yes,
let's go.
love it.
Yes.
And shout out to Kiss Health Now.
Yes.
Her dad started a podcast called Kiss Health Now.
Very well.
And
Yes.
shout out to JR and what he
Awesome.
does. So let's dive into it. I always learn on this podcast. I just want to be a student and just, learn from the best. I got the money ladies are in the building.
Right.
Yes. I think D. Garrett told me while I was at lunch, she funds up to $30 million in hard money lending.
Which is excellent.
Yes.
It's huge.
Yeah, we have
mean,
access to
That's a lot of money.
A whole
commercial
lot of money.
funding.
That's a lot.
Yeah.
And with Chalamaine, she just celebrated over 1,000 transactions.
1,000 transactions.
Yes, from the end of 2016 to January of this year. So
That's a lot
9
of
years.
work.
That's a lot of work. Yeah.
That's a lot of work.
Fantastic.
Yeah.
Yes.
So
And those are people that you helped some type of way, where they did a refi or they did a home close or with all brand
So
new
I would
homes.
tell you that out of those numbers, like refinances, I want to say it might have been like 10. Like I am heavy purchase
Whoa.
business.
Wow.
Yeah, when
That's
the
good.
refis were coming in, when I was helping people purchase. That's just my deal.
I love that.
Yeah. So
And I want to talk a little bit about the purchase side because one of the conversations we had was being that I'm new to Texas. I mean,
Yes.
I haven't been here quite 3 years yet, so I still consider myself new. But
Right.
we talked about first-time buyer programs.
Right.
So tell me about the first-time buyer program that we talked about.
So there's with being a first time home buyer, you could have owned a home before, as long as you haven't owned one in the past 3 years, and you would be considered a first time home buyer, right?
Yeah.
But with the state of Texas, there's many programs. You can get up to 5% in down payment assistance.
Wow.
And in addition to that, you can get 20% property tax credit,
Whoa.
which means that's extra money in your pocket. And so effectively with the mortgage credit certificate, it really reduces the effective interest rate by like 1.5 points. So let's just
huge.
say
That's huge.
today the rate is 7. Just using this for example, if you're going to max out the amount of assistance you're going to get, well, really technically, you would be looking at the effective rate really being, I'm going to say 5.5%, right? If you apply the money that you get from that mortgage credit certificate to the mortgage, because you're able to remove that interest that you're being charged. So, there's lots of programs out there that help first-time home buyers. And even if you're not a first-time home buyer, there's just so many things out there to help you remove just the hard part about getting into a home. And really, I mean, one of the places I was at today, we were talking about, how people are applying for loans. And I tease, I'm going to get off topic, but I'm going to come back to it. So in the Black community, as far as the order of how people apply for loans, Black women apply first. Then you have Black men who will apply second. And then husband and wife couples, or I should say couples, I may take the husband and wife, couples are third.
Co-applicants.
Right, yeah, okay. Compared to our Anglo community, when they're applying for mortgage, husband and wives apply first.
Wow.
And then a white man would apply second, and then the white woman would apply last.
Which means they have probably more capability of getting the loan.
Right,
because of the financial stability.
Exactly, exactly. So in our area, based off the numbers from 2023, Black homeownership was about, like 11% of the share opposed to our counterparts that could have up to 50% of the share of homeownership. And so there's a lot of different reasons, but primarily a lot of them is that where are our families? Why are we not applying together so we can have a higher buying capacity? And then when you take our the Black woman who's applying first, she may make a lot of money.
That makes so much sense.
But she has a lot of debt because she's carrying the family. She's carrying maybe car note for herself, and maybe the car note for her child, or maybe for a parent, or student loan debt, credit cards, all these things, right? So I say all that to say, I mean, we really got to think about how are we as a community going to increase our wealth? And it's not single-handedly. We got to retrain our brains. Everybody's like, I got to get out and get it. I got to live it how I live it. Everything is about I. But if we're going to gain this wealth, we've got to know that we got to come together to do it.
Level up alliance.
Yes.
Get an alliance.
Get an alliance. That's so, man, that's, because she said something there.
You said you was going to learn something today.
I'm learning. I'm like,
He started out, he's like, I learned something every day.
Let me get that right.
Go ahead.
So, how do they find that? How do they find that statistic out? Do you?
So there's HMDA data, and that's collect. So all lenders are required to report that information. So it shows on the application, male, female, husband and wife, think they collect that data, so then that way they can spit it out and say, this is the percentage of people of this dynamic, this familial status, things like that.
Are they getting more creative now that it's been harder to get funding for homes? Like, I've heard of now friends can get as a co-applicant.
Yeah, and that's a great question. It's been there, but how many friends do we trust? No, I'm teasing.
Right.
But yeah, you can have a co-borrower or a co-signer. Yes, you definitely can do that to help remove the buffer or create a buffer. Whether or not it's debt to income ratio, whatever you're needing to help you get over. And then the other statistic is that, for us, 1 in 4 applications is denied, right?
Wow.
But the reason why, the biggest thing is going to be misinformation on the application. You think about, like today, I pulled, somebody went online, completed their application, and it came back no information for the credit report. So I had to call her, and I said, hey, because I kind of look at, the little bullets. I said, is your name, are we missing your middle name, or did you move, or did your name change? And she goes, oh, well, my, I didn't put my middle name on there. Maybe that's it. I said, well, let me also, I said, cool. I typed it in. I said, well, let me verify the social. She goes, oh, I must have been moving too quick. She typed her social in wrong. But so if it was a big bank and it would have came back, it would have said no credit score, you're declined, right?
Wow.
Because she wouldn't have got that level of service.
Wow.
And that would have been it.
That would have been it, right?
Yep.
But for me, I took the time to call and figure out what it was, So 1, we've got to slow down. And then 2, we got to realize that when you're applying for a mortgage, don't think, oh, I'm not going to tell them about this account because, if I have it, they're going to want me to use it. People think that way.
True.
If you're not going to buy a suit. You're not going to buy a car where, you got to walk in there and be like, okay, well, I want to, you want $200 for this suit. Can I offer you $150? That's all I got. Buying a house is not, that's all I got. You show everything, and then we can determine what we don't need. So some of these applications are being turned down because they don't have all the information. You could have, a CD with $20,000 sitting in it. But you tell them, oh, I don't have no money, and that can make the difference. It's not that you have to use it; it can be reserves.
Mm-hmm.
What is some new stuff that that's out right now, like for programs? I'm pretty sure because we was talking about just different ways of. Well, let's ask Chalamaine. We asked the same question. So Chalamaine, if somebody had, let's say they bought the house in 2019, and as of right now they have $100,000 of equity in the bank, or in equity in the house, what would you advise that person to do?
Okay, so 2019, $100,000 in equity. We got a couple different ways we can go about it. Excuse me. If they've outgrown the home, then they can maybe look at downsizing, taking that money out the home, paying off debt, and having, or I've had some people needing to upsize, they'll take the money out and apply it to the new purchase so maybe they can get the home that they're really wanting, But if they have a really smoking low interest rate from 2019, then I say keep that interest rate,
Keep that house, yeah.
And then you could do a line of credit to access that cash.
Mm-hmm.
There you go. Hey, ding, ding, ding. She won.
Okay. So, yeah.
Because that's what you said, right, D?
Yeah.
And D, what was the plan of action after that? Because you have something to do with that line of credit.
Yeah. So one of the things that I have been sharing with some of my clients with as far as where to put that money, because it's just locked in the four walls until you actually go out there and pull it out of the home, is that you can actually take that money and put it in another revenue generating tool, whether it be a business where you're going to generate revenue or another asset such as life insurance. So that's another asset that you can actually have that shows up as an asset when you're looking at your financial documents. And then actually with life insurance, certain type of cash value life insurance policies, you can actually grow that money anywhere from 6 to 8 to 10 maybe % as far as that annually if you just keep it. And so then you could actually also put it in a long-term growth plan, which could be a fixed index annuity. So you can take that money and put it in other tools that will actually grow your funds rather than leave it in the house where it's just sitting there, maybe. And hopefully the market doesn't go down in terms of housing, because you can lose equity on a home as well because the market does go up and down. So pull it out while you've got it and use it towards something that you can generate more income from.
I think a lot of people don't understand that. So
okay,
let's break it down. So shout out to our traditional banks.
Yes.
So do you know that the banks say up to $250,000 is? It says up to. It doesn't say $250,000 is secured. So what does that mean? What's up with that word up to? Like, does that mean if something? If the bank go out of business, we're gonna look. I know you had 500 in here, but we're gonna give you 100,000. Like, what do they mean by that?
When you're talking about FDIC insured?
Yes.
Well, I'm not a banker in that regards as far as FDIC insurance. However, it's up to, meaning if you didn't have up to that amount, anything under $250,000 would be insured by the bank. So if you have more than $250,000 in one particular bank, you definitely want to move it to a different bank in case something happens to that bank, like Silicon Valley.
Exactly. So let's talk about that. So if $250,000, so Chalamaine had $250,000 in the bank in a 365-day period of time, how much would that $250,000 just sitting there make?
Oh, it depends on what type of tool she has.
Just a regular schmegular.
Math, my brain, you want me to do some calculation? I don't know.
Based on,
you tell me.
Or would you tell them, like you said, to put it in a, what are you saying to educate? You was educating the people to move their money into a compounded annuity or something
okay.
like that?
Oh, okay. I hear where you're going with that. So in terms of rather than letting it sit in the bank and earn minimal interest.
That's what I meant.
Like from a savings account or a bond, where, I mean, if you're getting on a regular savings account, if you're getting 1%, you're doing great. But, there's some high yield savings accounts that probably aren't even outpacing inflation. But to your point, you can take that money and put it, rather than leaving it in the bank or with a bond, you can put it into a different wealth tool in the form of an insurance product. There's, we talk about different products out there when it comes to money, growing money. Most people put their money in mutual funds, stock market, those type of things. But those are variable accounts that have the tendency to go up and down with the market. So if you don't want your money fluctuating with the market, then you can actually put your money in a more secured vehicle, such as a life insurance policy or an annuity, fixed index annuity, not a variable annuity. So. Yeah.
And explain that fixed versus variable?
Okay, so a variable annuity is also still tied to the stock market, or not tied, but money is still invested in the stock market, and so your funds have the ability to go up and down with whatever
is it the fund. Is it the LIBOR index, or
Yeah,
yes, okay,
yeah. So there's different indices that the variable markets are tied to.
Okay,
but they're tied to how the market reacts, and they're actually invested in the market, and so that's why your money can go up and down, versus a fixed index or an indexed product is just tied to the index performance, and it's credited from a point to point from one date of the year. Today's March. I don't know.
It's a hedge.
Yeah. And so you go from that date until the next year, or even a 2-year point to point, and whatever the market did in that indice, you get credited for that growth. If the market goes down, you just stay at zero. So you never lose any money, but it's always compounding while it's in there. So you never lose any money.
See, that's
as Albert Einstein said, the eighth wonder of the world, compounding interest.
Compounding interest.
Yes.
And also talk about the Kiss Wealth Now compound. So another thing that I learned, that instead of having the money in the bank, which ain't doing nothing, put it into real estate.
Yeah.
And it's gonna. Well, history is showing that it's going up. I mean, I don't want to.
Yeah.
I'm not an advisor either, but every real estate.
And I was a realtor back in 2008, so I don't want to go back there.
But, right.
It's not that bad.
You were in the middle of that.
I was in the middle of that. Yeah.
I know.
So your house was this, and it was like this the next day.
Well, essentially, yeah.
Wow.
Yeah, it dropped. Mm-hmm.
Yeah. I mean, everybody went through that. Like, my house was like, oh wow, I owe this much. My house is worth this, but I just wrote it out and just watched it tinker back up and tinker back up, and and then so it bounced back.
Let's talk about that, because actually back then, my mother, someone had convinced her to get into an interest-only loan, and so in her house back then, it was upside down. And so then we tried to do a loan modification, and she didn't qualify. I don't know what the qualifications were. I'm not a lender, but she was at risk for loss because she was upside down and was in a interest-only loan, and the value of the property was less than what she owed on the house at that point. And so I guess, do you see any of those type of loans still being originated, interest-only, or ARMs?
I think
adjustable rate mortgage.
ARMs are out there, and the ARMs were unpopular for a long time, but then when rates raised, then they became back popular. So normally people are going to they would do a 5-year ARM or a 7-year ARM that gives you time to refinance into that fixed vessel permanently at some point in time.
Let's talk about that, because for people that don't know what an adjustable rate mortgage is, that was actually the first property I ever bought, and I credit this to Arthur Brown. Shout out to Arthur Brown.
Hey, Arthur. No.
He was my first lender, and I purchased my first condo using an adjustable rate mortgage. But he was really good at educating me on how that worked and what the intent was. Like, okay, if you plan on being here forever, then this is what's going to happen.
Right.
Versus, this is your starter home, and then in 2-3 years, can you share with the people how that works?
So, and that was a great way that he explained it to you. So, if a person is a traveling nurse, I'm using that as an example, or they travel a lot and they're just buying a home just for a season, then an ARM would be a great product, because you're not going to be here long term, right? But if you are going to be there long term and you're getting this ARM so that way you can take advantage of a lower rate, then yes, you are going to know and be mindful that you're going to have to refinance into that permanent loan because, the mortgage can go up 1 point a year. That's the max, but it can keep going up. It's going to be variable, which is just not a safe place to be in. So you want to know how much your mortgage payment is going to be every single month. So, I, even with all the ARMs kind of coming back and being popular, I still haven't put anybody in an ARM because it made more sense to me to do a permanent buy down to get the same benefit of the ARM.
Okay. Explain the buy
that
down.
way, a person could save money because it's not free to refinance, right?
Facts.
It costs. And the recapture period typically is going to be about 3 years, meaning if I refinance today in 2025, I'm going to pull, let's say, $8,000 in equity out of my home to do it. Well, it's going to take me about 3 years to get that back, to build that back up for it to have made sense. So a buy down basically says if the rate today is going to be 6% and I pay 1 point to buy it down to 5.5%, then, that's a permanent buy down. So I pay a little bit of money up front so that way my payment will be lower across the duration.
So you could buy it down up front, like the whole bulk of that point.
Yes, I hope, yes, you can do that.
Wow.
And so each eighth cost,
each eighth. She said eighth.
Eighth of a percent.
An eighth of a percent.
Now, when you do a buy down, do you have to go through all the credit checks and all that, or can you just boom?
Oh, no. It's a complete process. So when you're ready to actually lock the loan, then that's when we discuss rates and whatnot, yeah.
I wanted to touch on one other thing when you were talking about the down payment assistance and funds, gift funds.
Oh, yeah.
Yeah. Talk a little bit about gift funds and what you've seen, because I know you mentioned people when we were talking about putting a friend on the loan versus just let me borrow some money.
Right. So,
and what are the limitations
on that? Great question. So, if you are blessed to have someone in your life that wants to gift you money to buy a home, know that you're a good person, because most people be like, I want my money back.
Right.
But how a gift works, there is no cap on the amount of funds that anybody wants to gift you.
Okay.
And so
even if using down payment assistance.
Yeah, even if you're using down, you can, because we are, it's going into the real estate now. So whatever a person is willing to give you, it has to be documented. So if a person wants to give, for example, I bought an investment property last year, and I sold the house to my daughter, but I gifted her really a lot of money to make the payment.
That's crazy. That's when I first called you.
Yeah. I gave her a whole lot of money, and so there was no cap, on the amount that can be. So if a person wants to give $80,000 to someone for them to be able to purchase a home, they can do that.
Wow.
There's no cap.
And
documentation though.
Okay.
So it has to come through a verifiable, seasoned source.
let me ask you about that, because I haven't run into this yet. So say, for example, if somebody wants to pull money out of their cash value life insurance policy, would that qualify?
Yes.
Okay.
Because it's a verified, seasoned source.
Got it. Okay.
Yeah. So you can't, and I don't know. I mean, that's old school. People have money up under the mattress or in a can in the backyard. I don't know if people do that anymore now,
They still say it when
they say it. Yeah, that's the old school people. Like, I was talking the other day, and I was like, if somebody's going to send a fax, and to the fax machine, and I was like, oh, wow, Charlamaine, you're dating yourself. You said fax and fax machine. Like, who does that, right?
Facts.
I know, right?
That's funny.
I'm old. So, yeah, cash is not king with a mortgage. So if a person's giving money, they have to send it from their bank account, and they have to be comfortable with sharing their bank account in some instances, because some programs they require to see that it came from your bank account.
The whole statement.
Yeah.
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 How often do you deal with hard money, and what do you know about hard money? Like, I'm learning. Dee's been educating us right now, but how often do you deal with it right now?
I usually do probably 2 to 4 hard money deals a year. I mean, they're not, most people I get is traditional financing or non-traditional financing. And so hard money is when you don't qualify for non-traditional financing.
Hey, last
Yeah.
deal, bro. Here you go.
Yeah. This is what you got. Yeah. So, but a lot of investors use hard money. They're trying to acquire properties. Matter of fact, the investment property that I purchased, because I just didn't want to go through the hoopla and I was trying to close quick. I use hard money, because I knew I was going to have it for a little bit of time.
Short term. Yeah.
So how did that go?
It went good. We did everything we were supposed to do, and
Did you use it? You it was a property that you stayed in?
No, it was an investment.
It was okay, gotcha.
Yeah, you can't use it on primary residence.
Yeah.
See.
Yes.
Hey, look, I just answered somebody's question. Like, hey, man, I don't think I can qualify, but what can I do?
Yeah.
All right, so it has to be a
investment
property.
Yeah, because there's Section 32 rules that say the amount of fees you can be charged, for your primary residence, and hard money definitely exceeds that.
Yeah, it can. It can.
How many times can you do a hard money? Is there a limit?
No.
Okay.
No.
As much as you can pay back, you can get it.
That's right. And we look at that. We look at the cash flow. I mean, the financials, like I said before, or on a different episode, the financials. So you want to make sure that you've got your operating agreement, your articles of organization. If you're doing a fix and flip, we definitely need to have that scope of work. Photos of the project that you're planning to actually use that money towards. Comps, if you have comps in the area to support the after repair value, the ARV. So there's a package of information, shameless plug.
Right.
I can give you that information if you just connect with me, and we can definitely go through that and see if you can get your funding.
That's right.
Have you done a fix and flip before?
The one for that I bought for my daughter, and I'm actually, I was talking with a lady last night when I was at this builder. I was an investor event, and I was talking to her about a property. I need to reach out to her because she's going to have a property coming up. And I'm like, oh, I want it. She was like, well, for like $120,000 in Arlington. And she's like, she was like, it needs some love. And I'm like, yeah, but at $120,000, and once the love is done, you can sell it for $250.
Come on now.
Yeah. So I'm like, I want to get it.
Yeah, good luck with that.
Yeah.
Yeah,
Those are gems.
Let me ask you this, D. Are you able to give hard money for, let's say there's a pre-existing house, but we want to demo it and build?
As far as the scope of work and the experience, because you do want to look at the experience of that person that's doing that work.
That's true.
If it all checks out, then you can get funding for it.
Okay. Yeah, because that's happened a lot here in Dallas-Fort Worth, right? Some of these houses are
scrape and rebuild.
built in 1965, and they're right next to a Taj Mahal. And the house got the roof going in. Like, bro, let's go ahead and just say night-night.
Signs
Bulldoze
of
that joint down.
gentrification.
Yes.
It's a lot of that. Have y'all drove to West Dallas? And East Dallas? Well, you knew Kid on the block.
I'm new.
Yeah.
We're gonna drive through. You'll see. You'll see this really super nice house, and it's literally next door to Little House on the Prairie.
Oh wow! Wow.
Yes. It's
The land is what the
Land.
Yeah. I tell you, I mean, like I had a client today, and she doesn't qualify for a lot. And she's a single mom, 3 kids, but her buying power is 200,000. And so, but she lives in Dallas, and she's okay with staying in Dallas. So yeah, there's some homes out there.
Okay.
That's
for
crazy. 200,000. It's tough.
Really?
Yeah. Well, but the thing is, there's pride, and that's there's pride in homeownership, and
Absolutely.
and there's some other statistics that they say with homeownership. So kids who live in a home with their parents that they own that home, those kids behaviorally are better because they don't have to move. That this is permanent. You know what I mean? They perform better in school. So 155, 175, 180. If it's mine, it's mine, and my kids need to know this is ours and take pride in what we're doing.
Good.
I mean, it's just it's better. It's and it's a stepping stone, because if you buy that home for what you can afford, and like my first house was a box. It was a box, but it was my box.
Yeah.
And when
There
I
you go.
sold my box that I really didn't like, but I went ahead, I understood my assignment, is that I've got to have something, you know. 'Cause I was like, I will not be a hypocrite. Like, how am I pushing home ownership and you don't own a home? But, you know, but I bought what I could afford. And like I said, it was plain. It didn't, but, you know, but while I was there, I just did a little bit of this, a little bit of that. And when I sold that house, I took the money that I made, and I would not have made that renting.
Yes.
Something that wasn't a box, I would not have made that money.
Facts.
And I took my money from my box and I bought another house. And I didn't like that house either, but it was a stepping stone.
That's it.
And I took the money from that house and I bought another house. You know, it is, you know, rinse and repeat almost,
It
you know, but
is.
you can't do it if you're renting. Everybody's like, if I buy something, it's going to be what I want. But the problem is, why are you okay with renting what somebody else wanted? You know what I'm saying? Why?
Hey, my sister here preaching.
Dropping
I
it.
know y'all taking notes. Stay tuned. We got a special guest commercial for you. Check it out.
Hey y'all, Chalamaine here, Kiss Wealth Now. And if you're looking for lending and you want to be educated on the process, then you definitely need to reach out to Kiss Wealth Now. We offer down payment assistance. You do not have to have perfect credit at all. And like I said, we're going to educate you. So reach out to me, Chalamaine, Kiss Wealth Now, 214-738-4913. Back to the episode.
Welcome back to another episode of the Alliance Level Up podcast with Charlamagne Armstrong and D. Garrett.
Hey.
It's your boy Dream Motivates. And we're learning, and I hope you are earning and writing this stuff down, because
Right.
I think you're going to probably need these two ladies in the future. You know?
Definitely.
Let's do it.
Definitely for those who have been in dilemma mode, like, can I do a fix and flip? Well, you got the solution right here. What I like
Yes.
about D. Garrett is she told me that she'll actually get you ready for the hard money, like everything that you need to before you submit it.
All your documents.
Because you're not going to even submit if it ain't right.
No, I don't even want to waste anyone's time. So,
Right.
and I think one of the things that people get hung up on a lot of times is the scope of work. Because, you know, some of these newer investors may go in and they'll have a contractor come in and say, yeah, we can do this, that, and the other. And, you know, it's just kind of like just a round number, but the actual breakdown of that number, getting that documentation, it takes forever. I'm like,
Right.
come on now, scope of work.
Yeah, stay on top of it. Listen, I definitely wanted us to sit down. I can't wait till after these cameras shut off, because I definitely want to get into way more fix and flips.
Yes.
I don't have a portfolio. I built the houses and I just sold them,
Right. Yeah.
and I don't know if that was the best thing to do. But after
Well,
that
it's 'cause
last
it
house,
paid you.
Hey, look.
But after that last house, it stayed on the market a little bit too long, and then I just kind of like, so I haven't built one since 2023 because I'm trying to figure out what's going on.
Right. Yeah.
As a realtor, how's the market today?
Well, we still have shortage, even though it's like, okay, houses are sitting on the market, but we have a shortage.
Yeah.
You know, we just have people who are, you know, buyers are just scared to get into the market.
Yeah.
And so, you know, and builders are not getting as many building permits. So we're going to get back to a time where, you know, like now's the time to get to your home, because when everybody does start feeling good about it,
Right,
everybody's
that's-
going to jump in at the same time.
Yeah, prices
And
gonna
baby,
go up.
it's going up, you know. So but you know, it's like a perfect storm, you know, rates, you know, the rates maybe are where people feel comfortable, people feel good about the market, and they're coming in. So the best way though to hedge inflation is going to be to own a home, because you're buying a home at the price that it is today, right?
Yes.
And then you're going to pay based off of the price today.
Yes.
And then as that home appreciates in value, you got money in the bank. So that way you want Level Up Alliance to come in and help you figure out how to use that money, your silent savings. You know,
Yeah.
your equity is that silent savings, and
that.
you're able to use that to do so many things. You know, I always say the best asset is the one that you can leverage, not one that you use for cakes. You know, and so that's the best. That's the best asset.
Yeah, and I can't remember where I heard this, but it was with real estate. You should just buy now and wait
Yeah.
versus wait to buy.
Right? Yeah.
Because just like you mentioned, if you buy now, even if rates drop, you can refinance, capture that
Yeah.
savings.
That's
Now,
right.
are you able to do hard money in all 50 states?
Yeah. We have access to all 50 states.
Really? That's really good. Definitely probably, I think now that I just thought about it, I think I got a client for you in Atlanta.
Oh, wow. Okay.
That's
Yep,
excellent.
literally sitting.
Hey.
See, look, you got two
waiting.
clients, and then before the show, we were talking, and I'm like, hey, I got somebody reached out about fix and flip. So
Let's
look,
go.
yeah, exactly.
That's what we're here to do.
Definitely. Matter
Allies.
of fact, it's my brother.
What? Okay.
Yeah, my brother has a house in Atlanta, and long story. We'll talk to you about that offline. But also, do you you were a realtor? Did you know that? Okay, you know she was a realtor.
We did.
And do you keep your eyes open for fix and flip properties right now?
Well, you
or-
know, it's interesting because when I moved here to Dallas in 2022, I was of the mindset that I wanted to just do investing. But at that time, because I am a single family portfolio holder, I shifted my focus to multifamily and was looking at small, even 1 to 4 units initially, which fall into the residential space, and then 5 units and above for the commercial space. And so the sweet spot of trying to get into a small commercial space would be 5 to 50 units, because most investors that have excess capital to really invest, they don't want those smaller apartment complexes, or they're like, nah, let's trash, so
Yeah.
and so I didn't really. I'm sorry, what was the question? Repeat it.
No, I was just saying, do you keep your eyes open right now
Right.
for the
Yeah, okay. So I was
investment?
actively looking, and so I guess my focus kind of shifted from the type of product that I was looking for. And so I ended up investing in a syndication, actually, which was self-storage development. And so I'm part owner of a self-storage development that's in another state. And so I didn't do anything here locally. And so because I have my funds tied up there, I was like, okay, that's where that is now until it pays out, and it's done. I'm not really actively looking. But if I did decide, say for example, I got my cash out from that particular investment, and the next move would be, okay, yeah, let's look at something local, because I do want something local, but I would definitely put my connect with a realtor. Look for someone that knows the market and works with investors and understands the market, because I don't know Dallas like that.
Gotcha. Because with hard money, especially if you're doing hard money lending, it's almost safe. Is it safe to say that you can rapid fire them? Like you're not on stealth mode. Like I was on stealth. I didn't have nobody. I didn't have hard money. I sold my own crib. I became my own bank.
Okay.
You have the hard money. Let's say, because I tell people all the time, I don't deal with foundational work. If it's a foundation problem, I'm out. I ain't fit to be trying to, no. But if it's cosmetic, and I'm not tripped, I thought about it too, because I've built a house that took me 8 months, made 60, 70 on that house, right?
Okay.
I've seen people do a fix and flip and did 30, but they did it in 2 months.
Yeah.
I'm cool with that.
Yeah. Yeah.
So because I don't want to get ahead of myself, but if I'm this close to the money with the hard money with
Yeah.
you, is it safe to say that we can do multiple at one time? And if so, I would keep my eyes open,
Yeah.
because we know because basically you got to look at the comps,
Yeah.
right, Chalamaine? Look at the comps. And then based on what you're going to put into the,
Right, into the home.
but the only thing is the market of how long it's going to sit.
That's where the risk
And that's-
assessment comes in.
Okay, gotcha.
Yeah, based on the work that's needed. So
And that's why investors like to get things, 65 cents on the dollar,
Right, right.
50 cents on the dollar, as low as they can. So
Yeah.
that way, they have a little more wiggle room when trying to sell.
the holding cost.
Yeah.
Holding, just to keep the utilities on that you didn't expect to have for 2 and 3 months.
Man,
Yeah.
listen. Oh, boy.
Is that
City
a
of
sore
Dallas.
subject?
Oh, Lord. Okay, I'm going to give y'all the Cliff Note version.
Uh-huh.
I bought this piece of land. Oh, I was so happy. I can't believe ain't nobody bought this. And it was sitting there, and it was right next to, Chalamaine, the house was sitting there next to this lot. It was already platted, ready to go. The house is probably built 2 years ago. No brainer. This is 2019.
Right.
I bought the lot, ready to go. Come to find out, it has sewer, but no water. Now, first of all,
Utilities.
Right.
That it's a house. They stopped the water line
At that house.
right there at that house. So I'm gonna tell you, so y'all don't do what I had to do. You got to go to Dallas. You got to find a Dallas plumber, bonded by Dallas. Wait in line for that dude. The dude name was Cowboy. He had to come out there, and I had to buy an extension water line 80 feet
To tap
in for my house.
Yeah.
So this means before I even touch any of my horizontal, I have to boom, because then after that, now you get permit for water. Sewers in the back, water's in the front.
Wow.
So I'm like, man, this cost me $25,000.
What?
$25,000. And now that I think about it, I still need to go back, because the city of Dallas says once you do that, they'll refund you 30%. I never went back. I was so pissed off.
Go get your money.
I need to go get it.
Do the work. Get the money.
And so we built the house, and COVID hit. Remember bought it. So now I'm sitting. This is a very true story. Sitting, I'm just like, yo, man. Now, if I would have had finished that house, I probably could have sold it at that point for about 200. It was 1,700 square feet, 2-car garage. Probably could sell for like $260. COVID hit. Finally, stuff started opening up. 2021, I sell it for $340. So that was the only thing that saved me.
Wow.
Yeah.
Other than that, I would have took a haircut in the middle of this build, sis.
Wow.
Cowboy passed away.
No. And he was doing the work?
He was doing so I had to find
my goodness.
another
Oh, my goodness.
city plumber, bro. Yo, hey, to all my builder boys out there, y'all know what it is. Hey, shout out to you. It's
Sorry
real.
to hear that.
It's real.
But you know what? That passing away during a transaction, that part. Have you had that happen to you?
Yeah, I
Chalamaine?
had a
Jesus.
lady. Well, I've had it happen a couple of times, but with this one here, that the
Couple
lady.
times.
Yeah, I know people pass away. You know,
And I bring it up because I'm in life insurance, of course,
Yeah,
life
yeah,
insurance and lending.
exactly,
So,
yeah, yeah.
and I had that experience. So,
exactly.
yeah.
It
What
was, she was leaving him, and he wanted her to be happy, so he agreed to sign. To help her get a new place. So closing day, the loan was clear to close, and she went to go pick him up so they could go to the title company. She got there and he was gone.
Jesus Christ.
Yeah. And I was like, say what?
So did it not even close? What did
So
they
no,
do?
it
They
did.
extended
Yeah.
it?
So it did. So basically, what ended up happening is, we had to get the death certificate
Wow.
to prove that he couldn't sign. So she still qualified.
Golly.
Yeah.
It happens.
Yeah. And
Yeah.
so, and then when we got that, then we were able to, let her sign as by
Wow.
herself, as a
I had that
single-
happen one
a
time.
widow woman, excuse me.
Yeah, that's so sad. And not to keep a morbid conversation, but I had that happen to me one time as a realtor. It was a daughter. Her mother, she was in her 80s. They wanted to get a new house because they wanted to get her away from the stairs. And so we were under actually, she was selling that house and she was going to be moving. So she was the seller. And there was one step that was like a sunken room. And believe it or not, she ended up falling. She fell and then she broke her hip. She ended up in the hospital. Then she caught pneumonia. And then she passed away.
Oh, wow.
And I'm like, oh my gosh, the whole reason we were under contract was to get
Get you
and
out of
this-
the house.
Get
Yeah,
out of
for
the house.
these stairs. And fortunately, her mother had a whole estate plan in place. And so it was a smooth transaction, fortunately.
Yeah.
It was just still, additional paperwork, but it was so sad. I was devastated because I was
Yeah.
like, I had never experienced anything like
So
that.
she fell through the second floor?
Well, no, she fell off the step.
Okay.
Yeah.
To the sunken,
The
area.
sunken, it's just one step. So just that one step, and she broke her hip and then got sick in the hospital, caught pneumonia, and passed away. But
Golly.
yeah, and so definitely have protection in place. So of course, if you're in the middle of a transaction, that it can be smoothly completed. But yeah, I hate to hear that Cowboy passed away in the middle of your transaction,
Man,
but that
my
took me
man-
down that
and
path.
it was cool because he was the first dude to show me because I couldn't find. I was like, how do I find the water line? Because you had to find it. He said, well, you got two ways. You want the freeway or the one way that costs $5,000. I said, I need the freeway. He gets this piece of, it's like a wire, almost like a clothes hanger. And it was long right here and it was short stem, but you could twist it and it'll go like this. He said, so this is a magnet. And so he'll take it. He said, when the magnet moves right here, so it was like this, but you could see it moving parallel to the because it's the metal up underneath it. So we're walking and that thing says,
There
it
it
says
is.
right up under there. And he did like this. He said, see? I said, yeah. He said, now you got to take me to lunch. And that was the last time I heard from Cowboy.
Wow.
In the middle of all that. But all this stuff is like, if we don't have mentorship like Chalamaine and you, how to set this stuff up, we out here, they ain't teaching us this in school.
They don't teach it in school.
Yeah.
It's crazy.
We're just going to be out here just like me, just trying to figure out what's going
Figure
on.
it out.
I had
Yeah.
to sell my
Trial
own
and error.
crib.
Trial and error.
I had to sell
Yes.
my own house when all I had to do was call Chalamaine. She was like, no, bro, do a HELOC, call D. Garrett, set it up,
Right.
and then y'all out. I didn't know none of that.
Right.
Now
But
you know.
you know better, you do better.
You right
So
about that.
what's in the future for Kiss Wealth now?
Kiss Wealth now definitely wants to educate more for sure. And the initiative is just to continue to help families, help more families, you know. We got added to the Texas Veterans Land Board's website this year.
Fantastic.
Wow.
Which was
Congratulations.
awesome. You know, we're on the State of Texas website for down payments, and so we're wanting to be visible. You know, we're not Bank of America. We're not Chase. We're not Wells, and
Right.
so we don't have these big billboards. We don't have brick and mortar everywhere.
Yeah.
So the goal is just to be visible and make sure that people know about all the things that we do offer, and know that we are a place that's going to fight to help get you into a home.
Man, let me
Personalized touch.
There you go.
Let me
that
vouch.
part.
I've seen Charlamagne get somebody a house that had a 500 credit score.
Yes.
That woman's
504,
working.
I think
She's
it was
working.
504 or something.
Yeah.
That's working.
Got
Working.
the house. You talking about Holy Ghost dance. I ain't understand, but she just really cared, and she went back and forth with this client.
Show did. You
But
got
you
it
know, she fought for him.
Yeah.
And I think that's what
She
You
said, we're
got
going
on
to
the
level
phone
you
with
up,
it.
bro.
Yeah. Well, but the thing is, that's one thing about Kiss Wealth now. Like even today when I was at this meeting and people said, "Are you still with the same lending group?" Yep. And the reason is because I can pick up the phone and I can call the owner. I own Kiss Wealth now, but I don't own the bank. You know what I
Right.
mean? So Kiss Wealth now can get you the money. So I can call the owner of the bank and say, look, this, we're not breaking any laws. I need to preface the statement, but if I'm like, hey, these are good people, they fit the rules, they fit the guidelines. It's
That's the
unfortunate
difference.
that maybe our underwriter doesn't feel it, but the guidelines say it so.
Yeah.
And he'd be like, okay.
That's
Yeah, and
fantastic.
so that makes it good, because we are a direct seller to Fannie Mae, Freddie
Okay.
Mac, so we don't have overlays.
Good.
It's the difference between. So the difference between a bank is, CRA, Community Reinvestment Act, and then what we're doing as mortgage bankers, fair lending. So since we don't have the shareholders to answer to, we still have to follow the guidelines, but then we are able to sell on Wall Street, So these loans that we're packaging up and putting together, we're still turning around and selling them to Chase. We're still turning around and selling them to Wells.
Yeah.
They're buying them in bulk, on Wall Street. They're looking for something to create money for their shareholders, and we're
Man.
looking to free up liquidity.
Yeah.
So
It's a
it's a business, but understanding that at least here we have the ability to make it happen.
I love
I
that.
love it.
Yeah.
That's fantastic.
One of the hardest Working, girl. That girl be at. Work. Don't stop.
Right.
Definitely is Charlamaine Armstrong.
I do work
Proud to have you as a sister.
Yes.
And got another sister, D. Garrett. Congratulations on this amazing podcast.
Thank you.
Y'all give it up for Level Up Alliance podcast.
Yes.
Doing
We
good.
in here, y'all. We in here.
That's
Yeah.
right. Yes. Yes,
represent her sister today with the
Yeah,
Kiss
I
Love
know,
Now.
I know, right?
Now
.com
Exactly. And so let's talk about that. Having your brand.
Yeah.
And so this podcast is one way to put your brand out there. It's important, and when you have a brand, it can represent you, even when you're not representing yourself.
Yes,
Like,
yes.
this is a prime example
That's what
of
we
it.
doing.
I
That's what we
love
doing.
it.
I'm
I love
representing
it.
her.
Yes, I love it.
Listen,
Thank you.
guys, stay tuned. We got another episode coming to you right now. Shout out to D. Garrett and an amazing podcast.
Thank you.
Shout out
Yes.
to all the viewers that's been liking, sharing, and subscribing. And one more time, shout out to our special guest with Kiss Well Now,
Thank
Miss Charlamaine Armstrong. Hit her up. You heard the information. Definitely give her a call. Kiss Wealth Now is in the building. Thank you again, Charlamaine.
Thank y'all for having me.
One time for D. Garrett.
out.
We out of here. God bless.
Yes.